And then the third thing, which is really the big thing, I think, right now for the stock, is around autonomy. So, we made a call a couple of weeks ago, raising our price target over $1,000 on the accelerating learning cycles related to, level 4 ADAS and cars being able to drive themselves around. What we heard the company talking about last night was full rollout of that self-driving technology this year. And they're talking about not about geo-fenced areas, but really having those cars be able to drive wherever they'd like. And so seeing that come to fruition here this year, I think is a big deal for the stock.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to some comments from a Tesla stock analyst regarding Tesla's Q4 and full year 2020 results, their progress in terms of solving autonomy, their competitive advantages, and more. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Take a look at a stock that is on the move this morning. That is Tesla. Shares under a little bit of pressure after the company out with its fourth quarter earnings report last night. Joining us now to talk a bit more about the quarter, the year for Tesla, and what to expect as we go forward here is Colin Rusch. He's a senior research analyst over at Oppenheimer. Colin, great to speak with you once again. I'd love to just start with your impressions on where Tesla is today, coming off a quarter where they just generated almost $2 billion in free cash flow. A year they sold almost 500,000 vehicles. What does the next 3 years for this business look like, and maybe also relative to where you thought it would be a year ago?
Yeah, I mean, there's a couple of really key elements here. One, the unit growth is in excess of what we anticipated on a multi-year basis. So they're talking about 50% unit growth over the foreseeable future. So that gets out well ahead of street estimates.
Now, I just want to demonstrate what a 50% rate of growth on Tesla's deliveries would look like over a long period of time. So let's just assume that Tesla can maintain approximately a 50% rate of growth on deliveries year after year throughout a decade. Now, I'm not suggesting this is exactly what's going to happen, but just to illustrate the point, how phenomenal a sustained rate of 50% growth on any company in terms of revenues, deliveries, etc. looks like over a decade-long period. So Tesla delivered 500,000 vehicles in 2020. If we add 50% to those deliveries every year after that, we've got 750,000 in 2021, 1.125 million in 22, 1.687 million, 2.5 million. Wait, things are getting ridiculous now. 5.6, 8.5 million, 12.8 million, 19 million, 28.8 million vehicles in a single year. Again, this is just to illustrate the point. This is insane, and Tesla are confident that they can maintain a 50% rate of growth. In fact, on the earnings call, Elon says he expects that in 2021 and 2022, Tesla will grow deliveries meaningfully above 50%. But they believe that over the longer term, a 50% rate of growth on average is sustainable. And just for the record, here's Colin Rusch's tip ranks profile, ranked number 9 out of 7,245 analysts. So I think Colin in general knows what he's talking about. In fact, let's look at his ratings on Tesla stock over the last few years. What has Colin had to say about Tesla stock? Buy. Okay, you get the idea. Let's go back a little bit further. Maybe he only woke up recently. Buy. Wow, since 2013 he's had a buy. Period of holding there, 2016-17, then buy. Okay, so in other words, Colin has never had a sell rating on Tesla stock. Number 9, I wonder why.
The second thing is really about capital intensity and efficiency. So one of the things that they're doing is actually getting better throughput on their facilities, but also, figuring out how to make these cars a little bit leaner with less equipment, as they have fewer moving parts and start to really ramp up some of their battery capacity internally for the 4680s. And then the third thing, which is really the big thing, I think, right now for the stock, is around autonomy. So, we made a call a couple of weeks ago, raising our price target over $1,000 on the accelerating learning cycles related to level 4 ADAS and cars being able to drive themselves around. What we heard the company talking about last night was full rollout of that self-driving technology this year. And they're talking about not about geo-fenced areas, but really having those cars be able to drive wherever they'd like. And so seeing that come to fruition here this year, I think is a big deal for the stock.
Bullish as Colin sounds, I actually think that is an enormous understatement. At this point in time, I personally feel like the stock market is pricing in the potential that maybe one day in the distant future Tesla will solve autonomous driving, but in my opinion, they are just around the corner, and I don't think the stock market's appreciating or pricing this in. There's going to come a point, sometime this year, maybe early next year, where I think everybody in general goes, oh shit, Tesla actually has won the race. They actually have autonomous software. Holy fucking balls. And at that point, I suspect Tesla's stock, which has already gone to the moon and is on its way to Mars, will probably be headed towards Jupiter or Neptune. Don't say I didn't warn you.
The second thing kind of underlying that is a move towards a subscription model around that technology and potentially a fleet of vehicles that they would own and operate themselves.
So there's a couple of things to discuss here. The first of which is the idea that Tesla in the future may operate their own fleet of robo-taxis, as in not selling these vehicles to customers to operate, but operating themselves, deploying them solely as robo-taxis and never selling the vehicle to customers, just enjoying revenue from those robo-taxi fares. And this is something that Elon Musk himself has said. He talked about launching the robo-taxi network and suggesting that a combination of Tesla's owned vehicles and customer vehicles will build out the fleet. So when there's a need for Tesla to deploy their own vehicles, there aren't enough customer vehicles available for robo-taxi fares, Tesla will deploy their own vehicles in those markets. This may have changed. Who knows what's going to happen with this plan, but this is something that Elon Musk talked about in the past. Just imagine if Tesla in a few years' time is producing $25,000 EVs that are bringing in $25,000 per year of profit doing robo-taxi fares every year, paying for themselves 100% ROI every year for the next decade or more. Insane and a real possibility. And the second point is just around full self-driving subscriptions. Now, I'm going to pull some numbers out of my ass. Feel free to use your own, but I just want to demonstrate the kind of impact this could have on Tesla's revenue and profits. So Tesla's fleet size today is around 1.5 million vehicles. By the end of this year, it'll be closer to 2.5 million. So let's just see what would happen if there were 1 million customers subscribed to Tesla's full self-driving service. And again, just pulling a number out of my ass, let's just say that service costs $150 per month. Pick your own number, I don't care. This is just to illustrate a point. So this is the annual cost for somebody subscribed to full self-driving, $1,800. If we multiply that by a fleet of 1 million vehicles subscribed to full self-driving, that is $1.8 billion of almost pure profit, because the margins on full self-driving are enormous. It's literally a matter of turning on a button. The vehicles already come equipped with all the hardware necessary. Tesla behind the scenes, if the customer subscribes, presses a button, suddenly they're able to access the software and Tesla starts printing money. Now, just imagine a little bit further into the future, if there's 10 million Teslas, that's $18 billion of almost pure profit per year. Now, let's just extrapolate this even further. What if there's 10 million customers paying for full self-driving for 10 years over the decade? That would be $180 billion of almost pure profit just from full self-driving subscriptions, just from a fleet of 10 million customers subscribed to the service over a period of a decade. And now you guys can start to understand why I'm so incredibly excited about Tesla's future software revenue. There is going to be a tsunami of high margin cash flow. Think about this. Tesla's install base of users is growing year by year by 1 million plus vehicles now. Tesla's ultimately going to have tens and tens of millions of vehicles on roads, each of them fully autonomous. What do you think the driver who no longer needs to pay attention to the road is likely to be doing inside their vehicles? That would be gaming, productivity, infotainment, etc. Sales through the App Store, subscriptions through the App Store, more revenue for Tesla, almost pure profit.
So as we look out going forward, the valuation around autonomy is really unclear right now. Elon tried to address it last night on the call a little bit. I think we want to see what that subscription model starts to look like from a monetization perspective, and then we can start running our model from there.
Colin, interesting exchange on the call last night. An analyst asked how much longer Elon expects to be the CEO of Tesla. And I believe his answer was, quote, several years. What does that mean in your estimation?
He seems like a workaholic. He enjoys the process. He said very clearly that he didn't feel like the company had fulfilled its mission yet. And so there's multiple years left to go. It seems to me that there's, at least a 3 to 5 year run for him. And who knows what what else gets, kind of built out and evolving within the Tesla umbrella here that he gets interested in. And so we're not real concerned around a leadership change at this point. And certainly what we heard last night on the call was, a management team that was very focused. They're actually very transparent about some of the technology that they're working on and how it comes to market. It was really one of the richest earnings calls that we've heard in years from this company.
Colin, people always talk about competition for Tesla, and it hasn't really seemed to materialize, at least not here in the U.S. You can make an argument more so in China. When does it come? What does it look like? If you're a car buyer right now and you want to buy an electric vehicle, what are your choices, and what to you is as compelling or more compelling than a Tesla?
Yeah, right now, we've seen a lot of OEMs, kind of on a 2 to 3 year delay on some of their programs. We're seeing some new vehicles come to market, like you said, primarily in China, and what we're seeing is really, performance that just doesn't keep up with Tesla. And so if you're a new car buyer, at this point, I think it really depends on where you're at with your existing vehicle. The technology feels mature to us for Tesla, that there is, a reliable platform that they've been developing on and shipping cars for, 7-8 years. And so they've really debugged that. For some of these newer automakers, they're still working through that learning cycle. And so, one of the things that we think about is, with any sort of new technology, there's going to be early adopters that are willing to take some risk around some bugs. And then, there's the larger consumers. And I think what's going on right now is that as folks take a look at who's bringing products to market and who's really debugged those products, Tesla's way ahead of the game on that.
This is a really important point here from Colin. We know Tesla is years ahead of the competition. Not just years ahead in terms of having launched compelling electric vehicles, but years ahead in terms of learning, improving, refining, ironing out the bugs and kinks, and ultimately coming up with superior technology. This creates an extremely uneven landscape. Most consumers, not all, I know there's some irrational clowns out there, people who are brand loyal, etc. But most consumers who are thinking about buying an electric vehicle will probably follow a similar process to this. They hear about an electric vehicle, whether it's a Tesla, a Mach-E, something, who knows. But they first start thinking, electric vehicle, wait, I heard they're a bit cheaper, better for the environment, okay, cool, I'll look into them. They jump online, they do a little bit of homework, and they discover, unquestionably, that Teslas offer by far the best value for money, period. You cannot get anything else close to the same price with the same performance, features, or functionality, period. So, while customers are hearing about another EV that's being advertised by a legacy automaker trying to get their attention of the customer, what they're actually going to be doing ultimately, in many cases, is advertising for Tesla for the discerning consumers who do a little bit of homework. They see an ad for the Ford Mach-E on TV, they get online, they do some homework, they realize a Model Y is a much better option. So what's going to happen is Ford, General Motors, other legacy automotive manufacturers between them will collectively spend hundreds of millions, if not billions of dollars, ultimately selling Teslas to consumers who did some homework after seeing an ad for the Mach-E or something along those lines and realizing it was a steaming pile of shit versus a Model Y. While that's happening, Tesla, instead of spending hundreds of millions or billions of dollars trying to convince people their products are the best because they actually are the best and they don't need to convince anyone, Tesla will spend that same money improving their products even further and pulling further ahead RIP legacy automakers.
The other thing that I think people are thinking about is this full self-driving functionality. Who really has something that can enable that sort of functionality and is going to be able to upgrade their platform? And that's where Tesla really stands out in that they have an upgradable software platform and operating system, whereas no other OEM or major OEM really has rolled that out in a reliable way and really proven that capability yet.
It seems like most investors out there don't really understand how fundamental software is to Tesla's business. I mean, they've coded their own internal software instead of using enterprise software. The software that runs their factories is world class. The software in their vehicles is world class. Some legacy automakers are literally investing tens of billions of dollars and hiring thousands of software engineers just to develop the internal operating system for their vehicles and struggling severely. How in the fuck are they ever going to solve fully autonomous driving if they can't even develop an operating system with a lean, efficient software team? Something to think about.
Colin, I have about 25 seconds left. The Tesla teased that the new Model S will be 10,000 more than the prior Model S. What's the financial impact of that this year?
It probably is just an addition of margin at this point. It's a relatively small volume of total vehicles for them. In our model, it's just a little bit below 5%. So adding a little bit of gross margin on that is fairly modest at this point. I think it is a little bit of a tailwind, particularly as they work through some of the supply chain disruptions related to COVID. And so as they ramp through the second quarter into the back half and kind of get to a steady run rate on some of these other larger volume vehicles like the Model Y, and both in Fremont and in China, I think that becomes a fairly small deal. But I think it's certainly a tailwind for them as they move into the back half of this year.
Got to give some credit to Colin here. Level-headed, clear thinking, very valid points, and an acute awareness of how fundamentally important Tesla's software is to the future of the business. I guess that's how you become one of the top-ranked analysts of all time on tipranks.com. Let's bring up Colin's profile one more time just to admire a guy being dead fucking right about Tesla stock for the last 7 or 8 years. I mean, just look at the phenomenal performance. I mean, this is what being right oh shit. Oh, sorry guys, I'm sorry. Wrong profile. I did it again. Oh man, I did it again. Sorry Gordon, I didn't mean to inadvertently roast you for having no idea about Tesla stock for the last 5 years. It just an accident, just keeps happening. I'm so sorry. So before I go guys, let me know in the comments below. Who would you prefer to be listening to relating to Tesla stock? Colin Rusch or Gordon Johnson? Let me know in the comments below. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.